Imagine you're sitting in a cafe, sipping your coffee, and the conversation shifts to something that sounds like it's straight out of a crime thriller, money laundering. Now, before you roll your eyes and think, that's too complicated for me, let's break it down into something a bit more relatable. What if I told you that forensic accounting, a field most of us don't even think about, plays a crucial role in preventing and detecting this financial crime? Yep, it's true. So, what exactly is money laundering? Picture this. Someone makes money through illegal activities, maybe drug trafficking or fraud, and they want to use that money without getting caught. Money laundering is the process they use to make those dirty dollars look clean. It typically goes through three stages: placement, layering, and integration. In the placement stage, the illicit cash is introduced into the financial system. Think of it as trying to sneak a suspicious looking character into a party. Next comes layering, where the money is shuffled around through various transactions to confuse anyone trying to track it. It's like playing a game of hide and seek, but with money. Finally, in the integration stage, the laundered funds are reintroduced into the economy, appearing as legitimate income. At this point, the criminals can spend it freely, just like you might after a payday. Now, why should we care? Well, money laundering isn't just about crime, it has serious implications for our economy and society. It undermines the rule of law, distorts markets, and can even fund terrorism. So, how do we combat this? Enter forensic accounting, a field that combines accounting skills with investigative techniques to uncover financial discrepancies. Forensic accountants are like financial detectives. They trace financial transactions, identify red flags, and analyze complex data to spot suspicious activities. Think about it: when you're trying to solve a mystery, you need to follow the clues, right? That's exactly what these professionals do. They meticulously follow the money trail, examining bank statements, invoices, and tax records to find any signs of foul play. But it's not just about finding the bad guys, it's also about prevention. Forensic accountants help businesses set up robust internal controls to ensure they don't unknowingly become part of the money laundering game. They conduct risk assessments, implement compliance audits, and train employees to recognize suspicious activities. It's like giving organizations a financial shield against criminal activities. Now, let's talk about some of the techniques forensic accountants use. They employ advanced data analytics to sift through mountains of financial data, looking for patterns that might indicate laundering. Imagine trying to find a needle in a haystack. That's what they do, but they have the right tools to make it easier. They also conduct interviews, scrutinize documents, and provide expert testimony in court. Their work is vital in prosecuting money laundering cases and ensuring that justice is served. However, it's not all smooth sailing. Forensic accountants face numerous challenges. Money laundering schemes are becoming increasingly sophisticated, often involving international transactions and complex corporate structures. Criminals are constantly evolving their tactics, making it harder to detect their activities. But forensic accountants are rising to the challenge. They continuously educate themselves on emerging technologies, collaborate with law enforcement, and adapt their strategies to stay one step ahead. Now, let's zoom in on specific industries where forensic accounting is particularly effective. The banking and financial services sector is a prime target for money laundering. Forensic accountants in this field monitor transactions, conduct due diligence on clients, and ensure compliance with anti-money laundering regulations. Real estate is another area where laundering can occur, as criminals may use property purchases to hide illicit funds. Forensic accountants analyze these transactions to ensure everything is above board. But it's not just about banks and real estate. Even nonprofit organizations can be exploited for money laundering. Forensic accountants play a crucial role in ensuring that donations are legitimate and that funds are used for their intended purposes. So, how can businesses leverage forensic accounting to strengthen their defenses against money laundering? It starts with risk assessments and compliance frameworks. Forensic accountants help identify vulnerabilities and establish robust internal controls. They implement due diligence procedures to verify the identities of customers and monitor transactions for suspicious activities. And it doesn't stop there. Training and awareness programs are key. By educating employees on anti-money laundering practices, businesses empower their staff to recognize and report any red flags. It's all about creating a culture of vigilance where everyone plays a part in preventing financial crime. Now, let's touch on the ethical considerations that forensic accountants must navigate. They deal with sensitive information and must maintain confidentiality while also being transparent in their reporting. Balancing these responsibilities is crucial to ensure that investigations are conducted with integrity and professionalism. As we wrap up, it's clear that forensic accounting is not just a niche field, it's a vital component in the fight against money laundering. By understanding the complexities of financial crimes and the role of forensic accountants, we can appreciate their contribution to creating a safer and more transparent financial landscape. So, next time you hear about money laundering, remember that there's a whole world of financial detectives working tirelessly behind the scenes to keep our economy safe. Let's give a nod of appreciation to those forensic accountants, shall we? They're the unsung heroes in the battle against financial crime, and their work is more important than ever in our increasingly complex financial world.